The Federal Reserve just did something unexpected. In a surprising turn of events, they made a decision that has left many financial experts and analysts scratching their heads. They slashed interest rates by 0.5 percentage point. That's a big deal. This kind of drastic measure is not something we see every day, and it has significant implications for the economy. It's the kind of move that makes you wonder, what do they know that we don't? Are there underlying issues in the economy that we haven't yet seen? The uncertainty is palpable. This rate cut is a really big deal because it's the first time in over a decade that the Fed has cut rates this aggressively. Historically, such actions are reserved for times of significant economic distress. It's like they hit the emergency brake on the economy. But why? What are they seeing in the economic data that prompted such a bold move? The questions are endless. The official reason? To support economic expansion. They aim to stimulate growth and prevent a potential downturn. Basically, they're trying to make it cheaper to borrow money so that businesses will spend more and boost the economy. But is it enough? Will this move be sufficient to stave off economic troubles, or is it just a temporary fix? Only time will tell. Jerome Powell, the Fed chairman, says everything is fine. He insists the economy is strong. He points to low unemployment and steady growth. So why the drastic rate cut if things are so rosy? Powell says this is just a mid-cycle adjustment, not a sign of panic. He claims the Fed is just being proactive in addressing potential risks to the economy. But his words ring a bit hollow. It's like he's trying to put a band-aid on a bullet wound. The economy might not be in the gutter, but it's definitely limping along. And a tiny band-aid doesn't exactly inspire confidence. History hasn't been kind to rate cuts. Every recession in recent memory has been preceded by the Fed slashing interest rates. It's like a canary in the coal mine. When rates go down, trouble is brewing. In 2008, the Fed slashed rates to near zero to combat the financial crisis. Guess what happened next? The worst recession since the Great Depression. Not exactly a glowing endorsement for rate cuts. Of course, correlation doesn't equal causation. Just because rate cuts have preceded recessions in the past doesn't mean they're the cause. But it's definitely something to think about. So, what's the real story? Is the economy strong like Powell says, or are we headed for a recession? The mixed signals are enough to make your head spin. Maybe Powell knows something we don't. Maybe he's privy to some economic data that's got him spooked, or maybe he's just trying to avoid a panic. Whatever the reason, one thing's for sure. Something doesn't add up. And that's what's got everyone on edge. Section 5, Market Reactions, Wall Street's roller coaster ride. The stock market is like that friend who overreacts to everything. One minute it's euphoric, and the next, it's in a state of panic. And the Fed's rate cut sent it on a wild ride. It was as if someone had just announced a surprise party and everyone was scrambling to react. Initially, stocks surged on the news. Investors love cheap money. The idea of lower interest rates made everyone optimistic about future growth. But then reality set in. The initial excitement began to wane as investors started to think about the long-term implications. The rate cut, while initially seen as a positive, began to fuel fears of an impending recession. People started to wonder if the economy was weaker than it appeared. The markets dipped, then soared, then dipped again. Talk about a roller coaster. It was a series of ups and downs that left everyone feeling dizzy. The truth is, nobody knows what this rate cut means for the market in the long run. Analysts and experts are all offering different opinions. It's all just speculation and guesswork right now. Everyone is trying to predict the future, but the reality is it's uncertain. And that's what makes this whole situation so nerve-wracking. The unpredictability of the market keeps everyone on edge, waiting for the next big move. Section 6, Political Whispers. Is this about the election? Let's not forget about the elephant in the room, the upcoming election. Some people think the Fed's rate cut is politically motivated. They argue that Trump, who has repeatedly called for lower rates, is pressuring the Fed to boost the economy before the election. The Fed is supposed to be independent, but that doesn't mean they're immune to political pressure. And with the election just around the corner, it's hard not to see this rate cut through a political lens. Section 7, Navigating the Storm Advice for Anxious Investors. So, what's an investor to do in these uncertain times? Panic? Sell everything? Hide your money under the mattress? Not so fast. First, don't panic. This isn't the first time the market has thrown a curveball, and it won't be the last. Second, stick to your long-term investment strategy. Don't make rash decisions based on short-term market fluctuations. Third, stay informed. Keep up with the latest economic news and consult with a financial advisor if you're unsure about what to do. Knowledge is power, especially in uncertain times like these. Section 8. Staying ahead of the curve. The importance of economic awareness. In today's fast-paced world, understanding the economy is more crucial than ever. The Fed's rate cut is a reminder that the economy is a fickle beast. Decisions made by central banks can have far-reaching impacts on everything from mortgage rates to the stock market. It can change on a dime, and what seems like a sure thing one day can turn sour the next. Market volatility is a constant reminder of the unpredictable nature of economic forces. That's why it's so important to stay informed and be prepared for anything. Regularly reading financial news, attending seminars, and engaging in discussions can provide valuable insights. Don't just bury your head in the sand and hope for the best. Educate yourself about economics. Understand the basics of supply and demand, inflation and interest rates. Pay attention to market trends, and recognize the signals that indicate potential shifts. This knowledge can help you make informed decisions. Be prepared to adjust your financial strategy as needed. Whether it's reallocating your investments or saving more aggressively, flexibility is key. Remember, knowledge is power. The future may be uncertain, but by staying informed and being proactive, you can weather any economic storm that comes your way. Staying ahead of the curve means being ready for both opportunities and challenges. And who knows, you might even come out ahead in the end. With the right knowledge and preparation, you can turn economic fluctuations to your advantage and achieve financial success.